let's just jump right in. I want you to picture something. You're standing in line for a loaf of bread, right? A super simple, everyday thing. But what if the very rules of money completely broke while you were just standing there waiting?
And no, that's not a typo. That was the actual real-life price tag in Weimar Germany. 200 billion marks. That's what happens when a currency doesn't just lose value, it becomes totally, completely worthless.
So what does it actually feel like when money dies? Let's go back to that line, back to that bakery in Berlin.
You see the woman in front of you? She's not hauling groceries in that wheelbarrow. Nope, that's just for the cash. All of it, just for a bottle of milk. It got so bad that the paper the money was printed on was literally worth more as firewood than it was as, well, money.
And here's the part that's just terrifying. In the time it took for you to move up a few spots in line, maybe 12 minutes, your money lost 30% of its value. The baker is literally crossing out the old price and scribbling a new, higher one, right there, right in front of your eyes.
Now, if you're thinking, okay, that's some crazy ancient history, you've got to think again. This isn't a black and white photo kind of problem. We're talking about modern-day Venezuela, Zimbabwe, Lebanon. The story repeats itself over and over. Life savings just gone. Economies completely shattered.
You know, the common thread in all these stories is something called fiat currency. Basically, it's money that's not backed by a physical thing like gold. It's backed only by our faith in the government that prints it. And get this, the average lifespan for a fiat currency is just 27 years. The US dollar, as we know it today, has been a pure fiat currency since 1971. You do the math. It's definitely something to think about.
Now, if there's any good news in all of this, and that's a big if, it's that these collapses aren't random acts of God. They follow a script. It's a predictable pattern, almost like a financial autopsy that keeps finding the exact same cause of death every single time.
And here is that script, the 5 stages. Stage 1, the government spends way more money than it brings in. Stage 2, to cover the difference, the central bank just prints more money. Stage 3, people start to notice their money isn't buying as much. They lose faith. Stage 4, they start a mad dash to get out of the currency and into anything else that holds value. And stage 5, total collapse. This isn't theory. This exact sequence has played out every single time.
Okay, so that's the scary part. But the real question is, when the financial ship is going down, what are the life rafts? What do you grab? Well, history actually gives us a really clear playbook. Let's look at the 5 assets that have consistently floated while everything else sank. Life raft number 1 is probably the one you've already guessed, precious metals. We're talking gold and silver. And their superpower is incredibly simple. Governments can't print them out of thin air. Think about it. While those wheelbarrows of paper marks in Germany became worthless, an ounce of gold still bought you the same amount of stuff before, during, and after the whole mess.
And this isn't just some old-timey story. Look at more recent history. After the 2008 crisis, gold jumped 166%. Silver, an incredible 448% gain. Go back to the nasty inflation of the 70s, gold shot up 440%. You have to think of precious metals as a kind of financial fire insurance for when the whole system is burning.
All right, life raft number 2, stable foreign currencies. And this example from Lebanon just hits so hard. Imagine 2 nurses working side by side at the same hospital. One saved her money in Lebanese pounds. She lost 98% of her life's work. Her colleague saved in US dollars, maybe under her mattress. She lost nothing. Same job, same effort, totally different futures, all because of the kind of money they chose to hold.
Okay, number 3 is a bit of a mind bender for some folks, stocks. You'd think stocks would get crushed, right? But during Venezuela's collapse, their stock market went through the roof. Why? Well, a stock isn't just a piece of paper, it's ownership in real stuff, factories, machines, products. As the currency dies, the price of all that real stuff, measured in the dying currency, just explodes. But here's the crucial catch. Only companies that earn stable foreign money like US dollars actually do well. If a company only earns the local collapsing currency, they go up in flames right along with it. Life raft number 4 is all about the practical stuff, consumables and things you can barter. When the official money system breaks, people don't just stop trading. The currency just changes. In post-war Germany, cigarettes became money. In Venezuela today, a fisherman might trade his catch directly for some flour. We're talking food, medicine, fuel, tools. Now, this is a tactical move for short-term survival. You're not going to build long-term wealth with a stash of aspirin, but it might just get you through a really tough week. And the fifth and final life raft, agricultural land. Land that actually produces food. I mean, it's pretty fundamental, right? It creates the one thing we all literally need to survive: calories. But, and this is a big but, it comes with some serious risks. You can't sell it quickly, you sure can't move it, and as we saw in places like Zimbabwe, a desperate government can just take it. So while its value is about as fundamental as it gets, the risks are just as real.
Okay, so we've covered the life rafts, but it's just as important, maybe even more important, to know what the anchors are, the assets that will drag you straight to the bottom. Let's talk about what gets completely wiped out in a currency crisis. First on the list of things that go to zero, fixed income securities. We're talking about government bonds, treasury notes, anything that's basically an IOU from the failing government priced in their failing currency. Think about it. You are loaning money to the very organization that is setting that money on fire. It's not a winning strategy.
And the math on this one is brutally simple. Your potential loss isn't 50% or 80%, it's 100%. A total wipeout. Your paper promise becomes just as worthless as the paper money.
All right, the second asset that gets absolutely destroyed is the one that hits closest to home for most people, your savings account. Just plain old cash sitting in a local bank denominated in the local currency. It is sitting directly on the train tracks and the train is coming.
And again, this is not hypothetical. This is real life. In Lebanon, ordinary people who did everything right, they worked hard, they saved their money, they trusted the banks, they saw their purchasing power just annihilated, a 98% loss. The number on their bank statement didn't change, but what it could buy basically vanished into thin air.
So why are we talking about all this? Why does it matter today? Because this isn't just a history lesson. These patterns, these stages of collapse, we can see the same warning lights blinking on the dashboard of the global economy right now.
Let's take a look at this. It really lays out where different countries are in this pattern. You've got Iraq in stage 3, where people are already deeply distrustful of the banks. Then there's Turkey, pretty clearly in stage 4, with citizens rushing to buy gold as inflation runs wild. Lebanon? That's stage 5, a total system failure. And then, the sources we're looking at here point out some early stage warning signs in the US, things like rapidly expanding debt and the dollar's declining role in the world.
So after looking at all this, what's the big takeaway? What's the one thing you need to remember from this whole financial autopsy? It all boils down to one idea: what real diversification actually looks like.
Look, the point here isn't to be a fortune teller and predict the exact day of a collapse. The point is to understand fragility. If you think you're diversified because you own a bunch of different stocks and bonds, but they're all priced in the same currency, you're not diversified. You're concentrated. Real diversification means owning different types of assets that act differently when things get crazy. History has literally handed us the survival guide. So the question you have to ask yourself isn't if this will happen again somewhere, but is my portfolio ready for when it does?